Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors. August 18th with Shaun Burgess, Portfolio Manager on our fixed income desk. Shaun's going to share a few thoughts, a few ideas of what he's seeing in the fixed income market. Everyone wants to talk about interest rates 24 hours a day, so we're going to give you a few minutes to speak about it. Let's talk about equities and commodities first. Soggy market this week. Couple bullet points to keep in mind. About a month ago, we had reached weekly momentum numbers that correspond with the market needing a break. We spoke about that on the videos. When we were at the point where 80% of the New York Stock Exchange companies were trading with positive momentum, that tends to be an area that you run out of gas. The market starts to run out of gas. It coincided with the fact that we were stepping into earnings season. And I had said, what bothers me going into earnings season this quarter is the rip we've had into it. It sets the bar a little higher. So we've started to work off that high momentum number. We've gotten to a point where we're more comfortable now with the cash that we have looking for entries. So what ends up being our primary job during the day is looking for opportunity. And I mentioned last week, industrials standing out. Some areas in pharmaceuticals standing out. What do I mean when I say standing out? Weak markets can be very helpful to a trader or a portfolio manager because you get to see what hangs in the best, what stays green the longest. Those are names or sectors or indices that holders don't want to sell. They're showing and exhibiting relative strength. Those are the areas I'm interested in adding to our tactical portfolio, in adding to our U.S. core portfolio. So those are names I've been going over with our traders. We've been preparing to allocate some capital to, maybe next week, because we've worked that high momentum reading off. It's gotten to a point that we're not in the area of last October when only 2% of New York Stock Exchange companies were trading with positive momentum. Right?
Different market.
That's an
extreme.
extreme.
Talk about all the time.
We're not there. We may get there. One thing we know is we're not going to be able to call it to the day. So we'll slowly start allocating some capital here. The one thing we want to fight against is getting caught up by headlines. Headlines tend to get people making big opinions, and they really dig in on their opinions. And I know so few traders that are successful that dig in on an opinion and can't get off of it. We use that term. You've heard me say it before on here. Strong opinions, loosely held. So we go into a trading day, a trading week with ideas of where we want to be positioned. But we don't just lock into that opinion. We allow the market to give us signals of where opportunity is. So that's a little snapshot of what we'll be thinking about next week on the equity side. Shaun, 425 on the 10-year, back in that October 22 range where we peaked. What are you seeing?
You had as high as a 433 during the week, intraday. So, markets are repricing Fed higher, longer. That's been a drag. You also had some Treasury issuance. That's been a drag. All that's meant equities had a pretty rough week. Not terrible. Treasuries, same thing. Nothing to write home about. Not a great week. Munis held in really nice. We like what we see coming out of Munis. And, I'm the Muni guy. I'm going to talk about it.
Right.
But it showed really good strength. When we look at fund flows, we talk about these all the time on these videos. It's such an important thing to look at, especially in the Muni space, because it can really drive relative performance. You had this Treasury sell-off. What we didn't see, fund outflows. That would be key to a weaker Muni market. You didn't see those. You had a little bit, but not really much. So that's why Munis really held in here really nicely on the last couple of weeks that have been, pretty brutal to Treasuries overall. So we like what we're seeing on the Muni side. We like adding some duration here. So we're looking at long duration. You know, with this kind of market, as you said, you want to be opportunistic. You want to pick your spots because you don't know where it's going to go. But we like long duration. We like picking up value in here. And we're going to hunt and peck for, you know, the best issues that we can find at some of the better yields that we can get. So.
Yeah, when that fixed income market gets volatile, the natural reaction is to play it very, very tight. In reality, the inefficiency is on the long end.
That's where you pick up some great bargains, I'll tell you.
You know, so I'm sure yourself and John and Amy and Dan and the team will be looking to identify those spots where you can add relative value into some fear.
Some weakness, yeah.
Yeah.
We want to take advantage of it. So we're looking at that. You know, what we see in inflation is going to be really important in what the Fed does going forward. Had great retail numbers, but, you know, clearly they're in the driver's seat here, and the fear of them driving rates higher is going to really keep some volatility in the market. We're going to keep an eye on that.
Yeah. I'm going to stick with my opinion, which is just an opinion, means I can change that on Monday, that we're within shouting distance of the peaks in rates.
We could be.
Yeah, only foolish people call tops and bottoms in any market. But I think we're within shouting distance. We'll see in terms of the next 30, 60, 90 days. I think that'll give us some real insight.
It's going to be very important the next couple prints that we see how the economy shapes up.
Good, good. Oh, by the way, thank you very much. We went over 1,000 subscribers last week.
Great.
Now, Shaun, that's funny because you remember when we started these videos on a little Apple iPhone.
I do.
Just you know, doing it almost just pre-COVID, a little bit before COVID, and we've built up a nice subscriber base. Many of you are clients. Many of you are friends of ours. We enjoy the comments. Thank you. We'll see you next week. Enjoy the weekend.